Poland central bank announces gold buys up to 36.6% of total reserve. Poland central bank approved plans to buy up to 150 additional tons of gold, lifting potential holdings to 700 tons. At current prices, gold could approach 37 to 38% of total reserves. The move underscores a strategic shift towards bullion as a sovereign reserve anchor amid rising geopolitical and financial fragmentation.
Something major just happened in the global gold market, and most people missed it. Poland is quietly transforming its balance sheet into what can only be described as a gold fortress. With new purchases approved, gold is now approaching U.S.-style reserve concentration levels, a move that signals far more than diversification. At the same time, silver prices, Taiwan, and Latin America are being pulled into a single geopolitical system, one that has nothing to do with commodity prices and everything to do with corridor control, institutional power, and global stability. This isn't market noise. This is the architecture of the next monetary order.
Two stories today. Poland is not so quietly transforming its balance sheet into a gold fortress. And the numbers now show how close its reserves are to a U.S.-style gold concentration territory. The second story is personal pride. It's a geopolitical special. Today, we connect Taiwan, silver, and Latin America into a single continuity system that shows why China's strategic conflict is not about prices in Latin America for resources, but it's about corridor control, institutional leverage, and ultimately global peace. Taiwan is what's going on behind the scenes. Go down the road a little bit, you'll see that that's what's going to happen. Let's look at the markets first. 10-year-olds are down 1, the dollar is down 8, S&P 500 is down 20, the NASDAQ is down 75. Gold is up $96, over about 2%. Silver has been volatile all night, was down significantly. Now it's down 32 cents, which is, believe it or not, 32 cents is only 40 basis points at 94.20. Copper is up 30 basis points at 578. WTI is up 1.5% almost, 87 cents. Natural gas up 78 cents. Natural gas up almost 20%. That's your news. That's got to be weather-based because it doesn't jump like that unless it's weather-based. And that means the March contract is going to explode and the March-April spread is going to go crazy again. Bitcoin, unchanged bid. Ethereum, unchanged offer. Palladium down 38. Platinum down 11. Gold, silver up 1, as you'd expect. And the grains are all up. In our exclusive Silver Wars signal, widening China conflict. In part 1, we framed the silver conflict as a symptom of a much larger geopolitical contest. In part 2, today, we explain how Taiwan's strategic risk is governed by an integrated continuity architecture spanning diplomacy, logistics, resources, and financial settlement. Latin America anchors that system through corridors, processing, routing, and institutional influence. Silver pricing is presented as a surface signal, just a surface signal of a deeper geopolitical struggle shaping Taiwan's future and global stability. How does Taiwan factor into this? Well, China put out their third paper on Latin America, and the first section was about Taiwan. They want Taiwan to be globally recognized as part of China, and you do that by securing roots in Latin America and UN votes to that end. It's all the same thing. Watch. Scary. Next, out of Warsaw, Poland central bank announces gold buys up to 36.6% of total reserve. That's our estimation. Poland central bank approved plans to buy up to 150 additional tons of gold. That's a fact, lifting potential holdings to 700 tons. At current prices, gold could approach 37 to 38% of total reserves. More like 33 to 36 is our assessment. The move underscores a strategic shift towards bullion as a sovereign reserve anchor amid rising geopolitical and financial fragmentation. That's huge news, and it's probably why gold has accelerated over the last week or so. This news came out last night. It is, in a sense, not in a sense, in all senses, breaking news. In other news and analysis, we did a part 2 interpreting Shanghai COMEX spread movement. The episode presents a conditional probability framework for interpreting Shanghai COMEX silver spread movements. It explains how spread direction relative to market direction reveals whether Chinese demand or U.S. supply controls pricing. The spread is treated as an observation tool for structural stress, arbitrage activity, and potential inflection signals. Essentially, look, if we're all going to be long gold forever, or for however long we're going to be long gold, if we're all going to be long silver, and we're not going to get out, but we want to know what the hell's going on, when you watch the tape, it helps to know what the hell's going on. And this will help you know what's going on as it relates to the arbitrage spread between New York and London. And this is the way to look at it. I'm sorry. Everybody else who's talking about this, everybody's made some good points. This is how to digest it. This is the next level. Part one was the first level that everyone's talking about now. This is what's going on. Coming soon, we haven't gotten to them yet. Silver and the tariff that didn't happen, the copper-silver convergence, silver as copper's hidden profit engine, and why platinum and palladium are structurally short. Sorry we're moving so fast today. We have some things to do. PCE is due out today. Wednesday is construction spending.
Poland's central bank has approved the purchase of up to 150 additional tons of gold, lifting total holdings towards 700 tons. At current prices, that puts gold at roughly 36 to 38% of Poland's total reserves, a level approaching U.S. gold concentration territory. This is not symbolic. This is structural. Poland is effectively anchoring its sovereign balance sheet to physical bullion at a time when geopolitical fragmentation, trade wars, and currency risk are accelerating. And, historically, when Poland moves first, Europe follows. That helps explain why gold has surged sharply over the past week, rising nearly $100 in a single session, even as equities, the dollar, and bonds weaken simultaneously. Now zoom out. Silver's volatility isn't random. According to Lanci, silver is acting as a surface signal for a much deeper geopolitical struggle, one centered on Taiwan. China's strategic objective isn't about paying more for Latin American resources. It's about controlling the corridors, logistics routes, processing hubs, institutional relationships, and ultimately voting power at the UN. That's why China's latest Latin America policy paper opens with Taiwan. By embedding itself economically and institutionally across Latin America, China strengthens diplomatic leverage to reshape Taiwan's global recognition, without firing a shot. Silver pricing reflects this stress indirectly. It's not about demand today. It's about future control. This is where the Shanghai COMEX spread becomes critical. Lanci explains that the direction of the spread tells you who controls price discovery, Chinese physical demand or Western paper supply. Right now, arbitrage is breaking down. There's no easy financial arbitrage, no physical arbitrage, and no trade arbitrage.
Why?
Because we're in a mercantile, hoarding environment. Gold tells the same story. The gold spread with China is hovering near $100, a level where JP Morgan arbitraged aggressively in prior years, and now, no one is touching it. The system isn't broken. It's changing. From a technical standpoint, gold has now hit a measured move target near 4,800, and Lanci's strategy is clear. Stay long, ignore dips, and only add on confirmed breakouts, because the secular backdrop hasn't weakened. But there is a warning. When all news is bullish, markets become vulnerable to headline shocks, sudden peace deals, surprise supply releases, or policy reversals. That doesn't change the long-term thesis, but it does increase short-term volatility. And this brings us back to Poland. Central banks aren't trading. They're restructuring. Poland is the spearhead in Europe, and its actions reinforce one message. Gold is no longer a hedge. It's becoming monetary infrastructure again.
Okay, so a little bit of analysis here. Today we'll look at the chart in a second. Today we hit the measured move in gold at 4,800. So that's another measured move in the books. I want you to think of these things the way, if you can, think of them the way I am. At least this is the way I'm thinking of them. Measured moves are the only thing I'm looking at right now. If there's a dip, I'm not buying the dip. Okay? I'm not trading the dip. I'm just long. All right, so if there's a dip, I don't buy it, because if it keeps going down, I'm going to lose money. If there's a dip and a retracement and we break that high, measured move time. Measured moves only while checking on big picture undercurrents to reconfirm these daily. Otherwise, there is no reason to sell. So market makes a high, market dips. I don't buy the dip. Not right now, because that's trading. I'm already long the dip for fucking 5 years. When it makes a new high, then I will buy on a speculative trade. That's it. That's what I'm doing. Otherwise, there's no reason to sell unless there are undercurrents that undermine the secular picture, which I'm aware of. All right. I'm actually considering buying puts on the metal as I buy miners and sell off. So when the market dips, I may be buying miners and buying puts. That's the way I am right now. I have a high percentage in metal and a low percentage in miners, almost none in miners right now. Okay, so I want to buy miners. You guys know that I'm looking into creating a portfolio on that, and I'll update you on it as soon as I get the numbers down. But that's it. Also know this, gold and silver are vulnerable to news now. There's nothing but bullish news coming out. There's nothing but bullish reactions coming out, which means we're vulnerable to a blind side of news. Putin and Trump hug it out. China says, I capitulate. Could happen. Scrap metal is going to hit the market. Real news, not bullshit news. Gold. Banks start saying we're not going to buy any more gold because we already have a high enough percentage. Keep all that in mind. Please buy mugs and sweatshirts in addition to our hats and support independent media. I didn't write that, but I did read it. Okay, here's the only bearish thing I can give you. We have a double top in the spread. We have a double top in the spread between China and the U.S. We have a double top in China. And let's see what the U.S. looks like. This is silver I'm talking about. Silver, that's not a double top. That's a breakout of a bull flag, right? Okay. China, that's a double top. So again, the market's open in the U.S. now, and I think it's closed again in China. But we have to watch what they do when they're both open. But right now, if you're just looking at these charts statically on a daily, you say the spread is starting to close a little bit. That's all you say. Gold. I'd remind people that are focused on silver, which is for good reason, that the spread between gold and China gold, I haven't verified this, but the spread is about $100. At $100, that's where JP Morgan arbed it going back to 2023. And no one is arbing it anymore. There's no arbitrage financially because we're in a mercantile environment. There's no arbitrage physically because we're in a trade war. There's no arbitrage. And that's because everyone's hoarding now. One other thing I wanted to add. We have essentially hit Goldman Sachs' target for 2026. Okay? Every bank on the street has been raising their targets, telling people to buy gold. It's been Goldman Sachs holding back, being careful, being professional. Look for Goldman Sachs to go over the top in the next 3 months and put a big price increase target on gold. And then you make up your mind what you want to do then. You may want to buy more. You may want to sell, but that's just a trader talking. It has nothing to do with central banks are buying gold. Central banks need to buy gold. Poland is the point of the spear in Europe. What Poland does, Europe does. ECB, whatever her name is, Van der Schnitzel, whatever her name is, that chick just said the biggest mistake the U.S. ever made was going off the gold standard. Well, and what's your solution to that, sweetheart? All right. Sorry, being a little bit of a today.
So when you see gold surge, silver whip around, and spreads behave strangely, don't ask what traders are doing. Ask what central banks and governments are preparing for. Because Poland isn't buying gold for returns, it's buying stability in a fractured world. If you want to stay ahead of where precious metals and geopolitics are headed next, make sure you're subscribed, because this story is only getting bigger.